Hello gang! I've been gone for a week, but it feels like I've been away for a whole year when you look at what's happening in our market. Honestly, I was a bit nervous about checking the prices this morning, so I wouldn't turn out to be the jinx who breaks the winning streak, but so far things are green and let's hope they stay that way by the time you're watching this video. Today, I'll add one more slightly humorous catalyst behind this crypto rally. You'll find out which economic events this week could trigger additional volatility, what the team behind the Trump meme coin just did, and finally I'll tell you about the misfortunes of a bear who opened 14 short positions over the past 5 days and lost nearly $5 million. I'm Dimitar, you're watching Crypto Potato. I'm happy we're together again. Welcome me back with likes and comments, and if you're new to the channel, don't forget to subscribe and hit the bell. For more than a half a year, we've been delivering daily news updates on everything happening in crypto, so feel more than welcome to join our community. We start as always with a price overview. Bitcoin, which was chasing $80,000 at the end of last week, briefly dipped below $76,000 over the weekend, but buyers quickly stepped in again, and at the time of recording it's trading around $77,500, an impressive 22% weekly increase. Ethereum is performing even more impressively, climbing 30% on the week to nearly $2,500. XRP is up 50% for the same period and trades just under $1.50, while Zcash exploded 70% to reach an 8-year high. Pretty much every well-known altcoin you can think of is deep in green territory, and it's actually hard to find one that posted losses over the past week. After some digging, I found that Just and World Liberty Financial are among the few losers, dropping 8% and 2% respectively. The total crypto market cap has risen to nearly $2.7 trillion, which is roughly the size of Italy's annual GDP. The next few days are critical for the market because several major macro events could determine whether the uptrend continues or we see a deeper correction. And even though sentiment is very positive, macro always has the final say. The first key event comes on Wednesday, when the US GDP data for Q2 will be released. This is an important indicator of the state of the economy. If the report shows a slowdown, the market may start pricing in earlier rate cuts, something that traditionally supports risk assets like crypto. If the economy turns out stronger than expected, the Fed may remain more aggressive, which could cool down the enthusiasm. Also on Wednesday, the PCE index comes out, the inflation metric the Federal Reserve closely monitors and one that can also create short-term pressure on Bitcoin. And there's a third important factor on Wednesday, Nvidia's financial results. If the report shows stronger than expected revenue and guidance, it could boost sentiment around the AI sector and indirectly support the crypto market, especially projects tied to infrastructure, computing power and tokenized technologies. The opposite scenario, weaker results or pessimistic forecasts, could cool risk appetite and create short-term pressure on Bitcoin and other assets. The reasons behind the price recovery are obvious. The US Treasury's decision to double the maximum size of long-term debt buybacks to improve liquidity, something that made risk assets like crypto much more attractive to investors. On top of that, US President Donald Trump gathered some of the top crypto leaders at the White House to discuss the well-known Clarity Act and once again stated that he wants the country to be the global crypto leader. Another major reason behind the rally is the return of institutional investors. Data shows that spot Bitcoin, Ethereum and XRP ETFs attracted huge inflows in recent days. This is a super bullish factor because it shows that more conservative investors are entering the ecosystem, and it also forces the companies behind these products to buy real BTC, ETH and XRP to properly back their funds. Now let's move to a slightly humorous reason. Earlier this month, popular US TV host Jim Cramer interviewed IBM CEO Arvind Krishna and asked him some interesting questions about the future of blockchain security. Krishna shared his arguments about the looming quantum threat to crypto, after which Cramer decided to sell his Bitcoin. So far, nothing shocking, just another guy who sold his crypto after getting advice. But here we're talking about Mr. Cramer, who is famous for the fact that whatever he does, the opposite tends to happen. Examples? Plenty. In July 2025, Cramer created the so-called Park Basket, a portfolio he claimed would be stable, balanced and promising. He included Coinbase, Coin. A year later, Coin was down more than 60%. In late 2022, right after BTC had crashed below $17,000, he advised everyone to sell their crypto holdings. He said XRP, Dogecoin, ADA and Matic were going to zero. Needless to say, that was the end of the bear market and none of these assets went to $0. He's been so accurate with his major predictions that it led to the creation of a special X account, Inverse Kramer, which literally bets against everything he says. The account has over 1.4 million followers and is so successful that it's basically an institution in crypto culture. People don't follow him to hear what Kramer thinks, they follow him to know what not to do. Again, this is all in good humor, but it doesn't hurt to keep an eye on what Kramer says about crypto because, as we noted, there is a strange correlation. Meme coins also saw significant movement in recent days with Trump among the top performers. It's currently trading around $2.50, up 77% this week. Interestingly, at one point the token almost hit $3, but then something happened that sent it sharply downward. According to the analytics platform Look On Chain, the team behind Trump moved over 2.6 million tokens to the OKX exchange, a direct signal that a sale is coming. On-chain analysts note that this is not the first time. Trump often follows the same trajectory. A sharp rally, the team moves tokens to exchanges, a sharp dump. The token appeared right before Donald Trump took office in January last year and immediately engaged in a legendary pump and dump, hitting over $70 before crashing to almost zero. Since then, every major rally has been followed by similar on-chain signals. Additional pressure comes from several US senators urging the SEC to investigate the project for potential fraud or illegal enrichment, even though the president has repeatedly denied any financial connection to the token. Despite everything, Trump remains in the top 100 with a market cap of around $620 million, but it's important to know that it's 97% below its all-time high. Volatility is brutal and the team's behavior continues to undermine trust, making the token a classic example of a meme coin driven more by emotion and speculation than fundamentals. The past few days have been rough for the bears, and in our final story we'll look at the case of one trader who got badly burned by the fact that the market just won't stop going up. According to data, this trader opened 14 short positions on Bitcoin in just 5 days, and not only did he open them, every single one was liquidated. Total loss, around $5 million evaporated in less than a week. But the story doesn't end there. After 14 consecutive liquidations, a normal person would take a break, go outside for some fresh air, maybe reconsider their strategy. Our guy? Nope. He opened yet another massive short position, this time worth over $2.5 million. On-chain analysts note that this isn't just bad luck. It's a classic case of revenge trading, when the trader tries to win back losses by opening bigger and bigger positions, eventually falling into a spiral that eats them alive. The market this past week was completely dominated by buyers and short liquidations were piling up one after another. In other words, bears were under heavy fire, but this particular trader became the symbol of how dangerous it is to fight the trend. His address is publicly tracked by multiple analyst accounts on X, and they have already turned him into a meme. Comments include, "Bro, stop, please, this is now a sports competition between him and the market. He's the inverse Kramer but for shorts." The story is funny, though not for the trader, but also educational. When the market is in a strong uptrend, trying to outsmart it with aggressive shorts often ends painfully. That's all for today, friends. I'll see you again tomorrow, hopefully not dressed in my hated red. Until then, as always, have a great and successful day.